Hello traders, Nick Shaheen here looking at AMD, Advanced Micro Devices. Clearly a popular stock on Wall Street, 2 years running the best S&P performer overall. That's pretty hard to do. And in 2018, when the market crashed into Christmas and the market went red, it was up 50% on that year. It fell from its top, but that's pretty impressive. So most of the credit goes to how sentiment is around the CEO, Lisa Su, I believe her name is. So Wall Street loves her, and they give her all the credit. So if she goes, I think that stock's in trouble. Just from a trading perspective, not as a company is in trouble. So I'm speaking perception. I'm not here to judge a company one way or another. I can tell you it's expensive. But it's not as expensive as NVIDIA. I know you're calling me crazy because it has a 3-digit PE, AMD does, at 160 or something like that, versus 60 on NVIDIA. But if you look at the price to sales, AMD is twice cheaper. I mean, half as expensive. Did I say that right? NVIDIA is twice as expensive as AMD when it comes to price to sales. So AMD sells at about 8, 9, I'm speaking from memory, versus 16 for NVIDIA. So if you're thinking growth stocks, the price to sales measurement for me matters a lot. So this is an aggressively growing stock, so is NVIDIA. So I don't look at PE. So the PE high doesn't really matter as long as delivering the growth. So fundamentals aside, let's assume that the top 3 companies are going to have enough business to go around. That's Intel, NVIDIA, and AMD. So eventually, all 3 are going to prosper. In a rising stock market, all 3 are going to be higher. Meanwhile, rising stock market, it isn't. We just had a big correction, and the VIX is over 1 billion. So the whipsaws every day are crazy. AMD fell 30% from the high. It bounced back up, I want to say 20%, and then fell today 1.5%. What is today? Today is 3.3. And so the chat room is open. By the way, there is a link to the chat room down below. Great fun, very good. We catch good trades intraday. If you're an active trader, you got to be in there. We got some excellent people in there. I don't allow jerks in there, so if you're a jerk, stay away. So back to AMD, it's pretty wild. And this one is a momentum stock anyway, so it's hard. So you have to do homework. I do homework to find the levels that matter. Nothing in here is a recommendation to buy or sell a stock because this is my opinion, and I am from Main Street. I'm an ex-engineer, so definitely not giving any recommendation or advice here. But I do want to share the levels, and you decide if the level makes sense or not. So this is a 2-hour chart. Every candle is 2 hours. It looks ominous. It looks terrible, but it's important to first zoom out. This is a daily chart, 1 year worth of data. So looking at this tells me that the buyers are in charge. 1 year ago it was down here, 27, 30. So we are definitely the buyers are in charge. So 1 week chart. So every candle is 1 week. Is this a bearish chart? No. But it leaves a lot of froth that can shake out, perceived froth. So if the market corrects, this one will correct faster because it's a momentum stock. Think Tesla, think CMG, Amazon. So they run fast in both directions. So there are levels. You can see I took out all my lines. I usually have 1 billion lines on there. And once it broke out of here, I said, okay, the sky's the limit. So I took out my lines so not to confuse anybody. But I left my trigger lines, and let me explain all of them. And I'll start with the most obvious of them. There's one line that I probably will advertise to say, hey, this is the one line I need to know if I'm a fan of AMD. If I'm looking to buy on a dip, this line right there, $41 would be the one I would buy for several reasons. I'm going to zoom in, but this is a daily candle. So every candle is 1 day. Clearly, we had a big rally. And we had another good day, strong day. Today was a disappointment. So, they rallied and then they faded. But they faded exactly where I thought they would fade. Exactly. So back to the point of why 41 and change. Let's say 41 for round numbers. First of all, that was the base. It was an emphatic rejection. This candle was this bad, and then they closed up this high. So that was a good day. So they tried to break it, and they didn't. And look where they stopped. Look left. Can you see this candle right here? I'm going to bring this guy in. This candle right there. If I put my plus over it, it disappears right there. It's the November pivot. First, a doji on that candle, and then a big statement on this candle. So they had a big day. They reversed it that day, but then they said, no, wait, let's take it up higher. No, wait, we don't know. Let's close. We don't know. They closed on it's a doji. So that candle to me means a lot. And it's not a coincidence that it served as the base, the absolute base for this whole rally. And now they came back to it. Clearly, it means something. So if I'm lucky and it falls back to it, that would be a great entry point for me as a trade and with tight stops. Even as an investment, if I wanted to own it for a long term, usually I don't try to snipe perfect entry points. So anywhere near this zone, it makes sense to buy it for the long term. Again, if markets are higher, this one's going to be higher. It's scary. The momentum stocks on the way down, they look like they're falling into an abyss, and on the way up, they look like, oh my gosh, they're never going to stop. They're about to correct. They're about to correct. So I expect it to be a good entry point. This is another pivot. So I don't think they'll slice through 43 or 44. I think they'll have a stop because this was an emphatic point from the candle just yesterday. So where the rally failed is not too surprising because of what we saw happen before. Yes, this was crazy. Like I said, this was crazy. So this is crazy, and somewhere in the middle lies the truth. So there was an attempt to stop it several times up here. All right. So I drew a line, and it's a trigger to tell me if I'm long, exit, because it's going to hit some resistance. But doesn't mean it's the end of the line. It's just close to the ledge of this one, and I don't want to be on board to see the disappointment of boom and then failure like it did here. So I usually exit. But if I'm not long, then I start watching because it could trigger a new high above this candle. Could trigger a gap fill for this guy. And I put a note in there, gap fill, but with resistance at 51 and change, because that's a big ledge to overcome. What is that? That candle right there. So these are the levels that I see on AMD. I could get cuter and go to like a 15-minute candle. I get a new set of clues. So this one tells me that any approach to 49 is going to hit resistance based on this timeline. Why? Because the whole zone is sticky. Why? Because it's been the most active. The volume profile tells me that this is where most of the trading for this whole period of time, which is not a long time, the 25th on, happened here. So on the way down, it provides support. On the way up, it provides resistance. So it's sticky. People like it. It's kind of good news, though, because that means that this base is a good consolidation, right? So the problem is, what if we lose this neckline? So if we set a low below 45 and change, 45.7, I think we have a head and shoulder-ish pattern to target the retest of this low, which also would be a buying opportunity for a trade. And usually when they say, the head and shoulders, they have to fall as big as the head. I know it's not a perfect head and shoulders. The heads are kind of lofty and shoulders are not aligned or whatever. To me, when you test the floor and the floor gives way, it's going lower. By how much? I leave it up to you. But to me, the eyeball goes straight to this zone right here. So 43 and change. So if I can take pain to 43 and change, I'm not going to panic out of it, knowing where it's going to go. But if I can't, then this would be my trigger to get out if I'm in it for a trade. Now, if I wanted to chase it, I would expect some resistance at this ledge, but above this might trigger, knowing that it would tried to fail at 50 point change. That's why I moved my line up there. I don't have time to dick around with stops and starts and stops and starts. I'm not that active as a trader. I can track it perfectly. So look left. That is a pretty spiky thing that sticks out there. So if I were to put R, in fact, I would do this. Let me see here. I would put R candle 15 to remind me that there's resistance from a candle at 15 minutes. I'll see it right away. So these are the short-term levels that I see, and new ones come up on different time frames. So this is a 2-hour chart. It just validates the levels we picked. Oh, by the way, this is where we are right now, right? Coincidence? No, this is a cluster from before. And it was a pivot from before. Like they tried to stop them, they burst through it, they used it as support, they used it as support. They fell through it, and now they came back to it. They say, you know, prior support becomes forward resistance, so therein lies the current battle. So as goes the market, this one's going to go. So if the market stabilizes, then the breach will, from here will take flight. So if the markets rally, now this is a big if. We got a virus going on, all of that. Sentiment is bad. And this panic in the news is creating an actual panic in the P&Ls because the whole world is shutting down. They're canceling school. They're canceling flight. Everybody's afraid of this freaking flu. It's the flu. We don't know its death rate. We know it's maximum of 2%. That's the measurement. But the denominator is so much, which, by the way, I used it before CNBC. I posted it on Twitter saying that we don't know how many people have it. So how can you calculate a death rate? We think we're sick with the regular flu and we get over it. We never get reported. Therefore, they calculate the death divided by a number that they're testing. Well, in the United States, they haven't tested dick. So it's a bunk number to say we have a 2% death rate or 20% or 5%. We don't know what it is. So it's a big unknown creating all this hubbub. So it may just turn out to be the regular cold on steroids. So overreaction caused an actual global economic panic. So now we have a global problem that's physical. Whether the flu is bad or not, the companies have suffered. China's closed for 3 months. That's not going to fly well. So now the fiscal spending has to come in and save it. I don't know if they have the balls for it. We shall see. All right, Nick signing out.